Eric Muathe, Muathe.com. Let's take a look at the long-term monthly chart for IPG. In fact, all data going back to 1997 all the way to 2007. So we're talking about 30 years of data. So there's a lot we can learn here. And what we see right off the bat is that during periods when the stock is having a bullish uptrend, like between between 88 and 2000, take a look at where the RSI generally was trading. RSI was holding above 50, and then in the periods where the stock was seeing this huge drop over a period of many years, that corresponds with the RSI trading below 50 on the monthly RSI. So this period here, and then we have a recovery phase from 2010, generally an uptick, and that corresponds with the RSI reclaiming the level back above RSI 50, as you can see. So clearly the takeaway is, when we are looking for stocks that we want to go up over a period of time for swing trades or for holding purposes, you'd want the RSI to maintain levels above 50. And when we are looking for bearish ideas, looks like when the monthly RSI is below 50, we tend to have this really bit of a favor to the downside, and the exact opposite when we want stocks to go up again, we might insist that the RSI hold above RSI 50. We see also that one characteristic, and it's something we touch on a lot, for stocks when they're moving higher, they tend to hold above RSI 50 on the monthly with uniform action. In other words, they come to the 50 level and bounce and hold with uniform RSI action. Here the same thing. So we're talking about the lows there and there coming on RSI 50. And when the equation changed and the stock was trending lower below 50, you can see that it is rejected. Every time it tries to move above RSI 50, it is rejected and drops to fresh lows. Even here, tried to go above RSI 50, eventually gave back all those moves and subsequently went back below RSI 50. That's why we have this drop during this period here in 07, 08. And recently, over the last couple of years, we've seen bounce on RSI 50 there for the re-entry there. Uniform activity bounce, looks like a V-type formation below RSI 50, back above it for the lows there. We touch the RSI 50 line over a period of months and hold for the lows there. And recently we did not even get as close as the 50 for the lows here. So we can see that the RSI 50 tends to be, for some reason, a psychological level where stocks change their behavior. So we always need to be on the lookout to understand how the stocks we are looking to own, or the stocks we own, are trading in relationship to their RSI long-term level. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. ERCS. More. Woo!